Hello, everyone, and welcome to this episode of Fund Manager Fridays with 5paisa.com. I'm Deepika Asthana, your host for the evening. अब स्टॉक मार्केट में सही इन्वेस्टमेंट डिसीजंस लेने के लिए बहुत ज़रूरी होता है कि आप मार्केट के बारे में सही जानकारी रखिए और आज इस वेबिनार में हम आपकी जानकारी बढ़ाने की कोशिश करेंगे ताकि आप इन्फॉर्म्ड इन्वेस्टमेंट डिसीजंस ले सकें. So, joining us today to discuss the ongoing trends in the market and to highlight compelling sectoral picks, we have Mr. Sachin Shah, Fund Manager, MK Investment Managers. Hi Sachin, good evening. Welcome to the show.
Hi Deepika, thank you so much and namaskar to all your viewers.
You perfect. Sachin, तो जैसे मैंने बिगनिंग में बोला कि जानकारी सही डिसीजन लेने के लिए इट्स वेरी इंपॉर्टेंट दैट वी नो द राइट थिंग्स इन द मार्केट. अब मार्केट में क्या है कि एक दिन में हज़ारों चीज़ें होती है. कुछ का इम्पैक्ट होता है, कुछ का नहीं इम्पैक्ट होता है. सो एंड आई एम श्योर यू विल एग्री विद मी कि एट द करंट मोमेंट मेनी interesting and impactful things which are happening in India, globally, from an economy perspective, from a geopolitical landscape perspective. So keeping that in mind, Sachin, क्या आप हमारे लिए maybe you can highlight 3 to 4 things that our investors should pay attention to in the current economic and geopolitical landscape?
Sure, Deepika. So, before really jumping to the current environment that we are into, let me actually first set the backdrop for investing. Okay. And so, in my experience of last so many years, which is more than 2 decades now, and of course, learning from a lot of successful investors, both globally and in India, I think, and also, of course, looking at the track record of the businesses that have actually created wealth for shareholders, for investors over last so many years, I think there are 2 or 3 very important things that we should always be focused about, and we should never miss that, right? So, the question is which businesses or which stocks actually create wealth? Multiplier आपको कहाँ पे returns मिलते हैं over the next 3 years, 5 years, right? So there are 2 or 3 very important things that actually come up. First is it's growth. Growth is very, very important. Not only important to my mind, it's pertinent, right? Life is all about growth. As we keep on growing, something that is living has to keep on growing. In fact, I remember the first time I went to the AGM of Reliance Industries, which was first AGM for me, but Reliance का उस दिन 25 साल हो गया था शायद. तो their slogan is life is growth is life, right? So that is what, so growth is very important. And Indian economy, as an economy, we are a growth economy. Indian economy is all about growth, and Indian stock markets respect the most where there is growth. So the first important thing that we should always try to think is which are the businesses, which are the companies where we see growth over the next 2 years, 3 years, 5 years, 10 years. Higher the growth, longer the growth, better.
Okay.
That's the first point.
Okay.
Second point is always the quality of this growth. How are we getting this growth, right? Now, one is that you keep on borrowing money and you keep on growing. The other is आप खुद ही cash flow generate करते हैं and you keep on reinvesting that money, which is beautiful.
Right.
Like if I'll just give you one example, if you go back to the days of Infosys in the early 2000, they used to grow at 50%, 100%.
Correct.
But the beauty was that whatever they used to generate, they could reinvest in the business to grow at another 100% the next year. So the reallocation of your capital, whatever incremental cash flow that you are generating, and when you reinvest that, how much returns you generate. So the incremental return on capital employed is something what plays a very important role, which is what we call as allocation of capital. आपके पास एक capital है, वो आपने किधर कितना invest किया, and how much is it generating back really determines how much you are going to be better off in the next few years.
Understood.
So 2 very important things. One is growth and allocation of capital. How you are, because we have seen in so many businesses where they generate good amount of cash flows, बट जब दोबारा वो पैसा रीइन्वेस्ट करना होता है, when they reinvest that money, they reinvest in probably undiversified business, or they will go in a new
Right.
geography
Yeah.
where they actually make losses, right? So which is not doesn't work out. So the important thing is how the businesses are able to regenerate a similar capital, a return on capital employed
Sure.
over a longer period of time.
Okay.
So growth and allocation of capital are two very important things that actually help investors to actually create wealth for themselves and companies to actually, become much larger and stronger.
Sure.
And now, keeping this the backdrop, I think what is important is that in the current environment, okay, as you rightly mentioned, the kind of the geopolitical challenges that we are seeing, how does it really impact India? That is the question, because
Correct.
largely 80-90%, or maybe more than 95% of our investors in India are, and even at this point in time, are largely invested in Indian companies.
Correct.
Less than 5% are invested in global companies.
Sure.
So I will talk about the Indian companies, how the Indian economy actually gets impacted,
Okay.
right? The impact is largely coming from inflation, right?
Okay.
Because oil prices have gone through the roof. They have crossed more than $100. All the metal prices, be it non-ferrous or even the steel prices, all of them are now rising, right? So for example, the aluminum prices have
Yeah.
crossed $3,500, copper has crossed $10,000, so on and so forth. Steel is also shooting up higher. So all the commodity prices are going up. Even the softer commodities like the wheat price, the sugar price, right? A lot of food inflation is also
Food.
going to hit us because globally all these prices are going higher. So the biggest challenge today as a country that we are, and we are importers of oil,
Correct.
right? So as the oil prices go higher at the country level, we are paying out that much money out to the other countries, the oil producing nations,
Right.
right? So that is the biggest challenge that we see today. Now, what happens when inflation happens? Obviously, all your raw material prices increase, right?
Correct.
So, just say if I am a manufacturer of a particular product and I'm importing a particular raw material and that price has gone up. Now, for me to maintain my profitability, I need to increase my selling price, right? Now, for that to happen, obviously, it's a function of my franchisee, how much pricing power my product has got, right? So what investors need to be very careful at this point in time is that the companies or the businesses that they are investing in, do those businesses have the pricing power to pass on the spike in the raw material prices? Do they have the customers who are ready to buy their product in spite of the prices increasing, right? Because what is going to happen now, that we are going to see the difference between the men and the boys. There will be certain companies who will not be able to pass on the price hikes because the customers will move to the alternate products or will move to the alternate brands, or they'll go downgrade because they are okay. But say, for example, if there's a baby food product, you stick to a particular brand, you will not want to change it irrespective of the price because you don't want to take a chance, right? Or you are buying a particular branded apparel, you want that apparel because that's what your brand is all about, right? So what I'm trying to say is the business franchises which have the pricing power, which are able to pass on to their higher inflationary environment, will actually turn out to be the winners in the next few quarters, right? So it is very important at this point in time that investors are very, very conscious and vigilant and aware that the businesses that they are investing in have a decent amount of pricing power to pass on to their customers, to their consumers, so that they are able to not only maintain their revenue growth, but also able to maintain their profitability.
Okay, understood. So actually, what you brought up is very interesting, Sachin, because inflation is something we all talk about. When we talk about inflation now, there's also a lot of talk about interest rate hikes and how that's going to impact the cost of borrowing and cost of capital both. But what you said about the resilience in terms of pricing power, um, I just wanted to understand this. So generally, that would only be the case with products which have very inelastic demand, right? Like your absolutely non-discretionary products जो आपको लेना ही है, या जैसे आपने बोला branded products where people are accustomed to a certain brand and just by virtue of that they are not willing to uh, upgrade or downgrade. They're okay with what they have, but and maybe that also leads me to my next question ki so keeping these parameters that you just pointed out, right, कि growth होनी चाहिए, quality growth होनी चाहिए, opportunities to reinvest capital more optimally होना चाहिए, and pricing power भी होना चाहिए. So ये तो बहुत company specific हो गया है, right, कि even in one sector there are some companies who can do this and some companies who can't do it. But overall अगर हम लोग देखें from a sectoral perspective, where do you see that we can actually find a larger number of companies which have all of these attributes?
Yeah, that's a great point, Deepika. So, again, if we see the history of Indian equities, there are a few businesses which have actually created wealth, or few sectors, as you rightly said. So when you say sector, so within that sector, a large portion of the companies have actually been able to create wealth, right? So if you see IT services for 2 decades now in India has been able to create that kind of wealth. If you look at pharma as a sector, have actually been able to do that. If you look at FMCG as a sector, these are all secularly growing sectors, and not only secular, but secularly profitably growing sectors, right? To a lot of extent, I would say even private sector banking has done a phenomenal job over this last few years, right? In fact, almost for 20 years, because almost 2 decades back, their market share was probably low single digits. Today, it's gone into 30 to 35% plus already. And at a profit pool, I think they might be at 60, 70%, or maybe even more, right? So these are some few sectors which have actually done very well. And my sense is that these sectors continue to have certain domain expertise. They have created those moats. They have certain value addition that they do to their customers, right? So for example, if we look at pharma as a sector, right, within pharma you will have 3 or 4 segments, right? One is your domestic formulations, which is a largely a branded play. So companies which have created brands, companies which have set up the distribution network, companies which have introduced a lot of new products over the last so many years and who continue to keep on introducing new products, have a very, very decent market share and very profitable uh, business that they profitable business franchisee that they have created, right? The other segment which is actually done very well in the last at least I would say 10 years, and actually it's been there for probably 15 to 20 years, but in the last 10 years they've done very well, and in the last 5 years even more better, and I think they'll continue to do even better, is the contract research and manufacturing space, the CRAM space, the CDMO space, right? Now that space, we have seen that today probably India is about just about $10 billion kind of a size, right? But the opportunity that we have is actually multifold from here, right? Because the customers today over there are actually procuring a lot of stuff from China. They are procuring a lot of stuff from countries based out of Europe, right? And India, with its 2 or 3 advantages. One is that India's expertise in terms of engineering. So when they have to do the plant and machinery capex, the cost of laying that out is relatively better in India because of India's engineering skills. That's one. Second, in terms of even the chemistry skills, right? We have some of the best scientists and we have many of them, right? So because of our domain expertise on the chemistry skill sides, we are able to give solutions to the customers at probably the lowest possible manufacturing cost, right? And that is where and the third, which is the most important part also when it comes to the contract research and manufacturing, because when we talk about contract research and manufacturing, the IP, the intellectual property rights, is with the customer, and they are very sensitive about this, because these are things which need to be confidential. These are things which have to make sure that they don't get leaked out. So the customers have to have the confidence in their contractors that they are safe with them, and because this is what the entire business is about. Their entire profitability of the customer is on their intellectual property, right? Because they have patented, a lot of these products are patented products, right? So and as the Indian companies have uh, earned the confidence of the customers, of the global customer, yes, that they have the chemical the expertise, the domain side, they have earned the trust as far as confidentiality is concerned. They have shown the economies of scale. They can scale up the businesses to the level they can actually deliver few tons of products at the shortest possible time, right? So those things have actually played out brilliantly, and we believe that this is where the opportunity is very, very large for Indian companies which are in this sector. So contract research and manufacturing and CDMO is something what we are very, very optimistic about. And the profitability again is very high here, because we have a huge arbitrage, as I said, in terms of cost of manufacturing overall. So in spite of our companies making 30-40% margins, the customer is still saving a lot, right? So something very similar we saw sometime in the early 2000 for the IT services, right? Where the labor arbitrage really played out so
Right.
brilliantly
Yes.
that even now today we are a very, very large IT services offshore base
Correct.
for all
Yeah.
these global companies. What used to be less than $10 billion, say about 20 years back, today it's almost 150, in the range of 120 to 150 billion dollars of business for Indian IT services, right, as a sector.
Right.
And as you can see that today we have already probably 10 plus companies in the IT services which are $1 billion plus
Robert.
profit
Right.
club,
Right.
right? Now, I don't think there are too many sectors where you will have $1 billion plus profit, 10 plus companies, right?
Correct. Yeah.
TCS is $4 billion, Infosys is $3 billion, Wipro is closer to, I mean, $1.5 to $2 billion, HCL Tech is another $1.5 to $2 billion, Cognizant is also, I think, $2.5 to $3 billion. So, like, you have at least 10 companies, right? So, IT as a services will also continue to do will very, very well. So that's another sector. I think third again, the BFSI as a space, right? Now banking and financial services, we were talking about the growth. Indian economy is all about growth, right?
Correct. Yes.
And obviously when that kind of growth is exploding in an economy which is as large as India, and with the demographics that we have,
Right.
right, where we have a very, very young population, right? When that happens, obviously the aspirations of a better lifestyle, an aspiration to grow one's own business, aspiration to have that entire entrepreneurial thing is very high at an economy level. Now, for that, those aspirations to be met, you need a lot of financing, and which is where the banking and the financial services comes into play, right?
Sure.
And which is where private sector has done a brilliant job, right? And particularly now with technology, the way they are reaching out to the to all the I would say, I mean, it's really, they've really democratized the entire availability and the access of finance,
Finance. Correct.
right? So the potential of growth over there, we have not even scratched the surface,
Okay.
right? So I think particularly for the retail and the SME levels, right? I think the growth out there over the next 5, 10, 15 years is going to be humongous, right? So we need many more Bajaj finances. We need many more HDFC banks in that
Correct.
sense,
Right.
right? So that is where, and because see today uh, we are still just a $2,000 per capita income,
Correct. Right.
right? So but the aspirations are of a $5,000.
Correct. Yes.
So for that to happen, everybody will take the leap of faith and try to invest within themselves, right? uh, and that is where this entire demand for finance and the growth of the economy will actually play out. So
Sure.
so my sense is these are some few sectors which will actually do very well over the next 3 to 5 years. One more sector which should actually do very well is also the automobiles and auto ancillaries,
Okay.
right? See, again here it's also a point about the the manufacturing as a sector.
Right.
Okay, not
Yes.
only autos but overall manufacturing as a sector. I think the thrust that we are seeing from the government
Yes.
is very very serious this time. Particularly if you look at the PLI schemes, and the feedback that we get from the industry is very very positive, right?
Right.
So I think overall manufacturing, and within manufacturing again particularly, exports oriented businesses, okay,
Okay.
they will actually do very very well. My sense is that, because if you see even in the current year, already we have crossed our exports are growing at double digit after many many years, and
Right.
our
Yes.
exports are at significantly higher number to the pre covid levels,
Okay.
right?
Take care.
So I think so auto and auto ancillaries again have a very huge scope to actually increase their exports, because we have that very large base where we can actually supply to the world. So that's another very interesting sector which investors should always keep it on radar.
So that's very interesting, Sachin. I think because especially when you brought up I mean, I was also going to ask you about this because IT and IT services definitely, India has at least achieved this like whatever growth we've achieved in this century has been on the back of services, right? But with the manufacturing push that the government has now, very strongly initiated, I think that's a sector also where, I mean, sector as a whole, because like you said, the auto, pharmaceuticals, har jagah manufacturing aa jata hai, is also something that should definitely be looked at. Which I am actually drawing, and correct me if I'm wrong, to what you just started with, key sectors where you can actually see good growth. So, I mean, that's my sense of it, because.
Absolutely right. No, no, you're absolutely right, Deepika. I exactly was trying to say the same thing, that, you know, auto and auto ancillaries, your pharma, which is on the manufacturing side, on the services side, BFSI,
Correct.
and IT. I mean, these are a few sectors I think which will see a secular growth over the next few years.
I'm inclined to agree really, and especially also from the BFSI side. I mean, of late. So honestly, when we talk about banking and financial services, private banks, में हमेशा there's a lot of positive sentiment surrounding private banks. But for once, I'm also convinced that it could do well. Is also because I think a lot of legacy NPA related issues have now been taken care of. So their books, balance sheets are also cleaner, lighter, and they are well positioned to capitalize on this growth that you were just talking about.
Absolutely, Deepika. And another very important thing, that they all have also now capitalized themselves. They all have
Yes.
adequate capital
Yes.
to grow at least for the next 3 to 5 years before they
Correct.
have to come back to the further to raise capital. And there's a very high possibility that if they actually this time manage the books well, then they may not need to come to the markets to raise capital,
Capital
because
again.
the regeneration of the profits itself they can reinvest, and that will allow them to keep on growing at 15 to 20% over the next 3 to 5 years.
Correct.
I completely with you that now that the base for the overall BFSI as a sector has got has actually it has been rebased
Very
to
best,
a
yes.
very for a very very strong foundation. for the at least the next 3 to 5 years.
Correct, correct. No, this is very interesting. I just want to recap this for our viewers also, because the things that you just mentioned, what I really liked was how it beautifully ties back to the three tenets that you initially started with about growth, quality, and reinvestment. So the sectors that you mentioned, of course, IT and IT services, they have experienced exponential growth in the last maybe since 2000, early 2000s, but they will continue to witness that kind of growth even going forward. Then you also mentioned pharmaceuticals. Within pharmaceuticals, you mentioned CRAMS as a space which could really benefit going forward, and the rationale there again hinges upon the I think the labor cost arbitrage. And also, like you said, the availability of superior resources in terms of the scientists and the chemists and the research initiatives that are available in our country. And then, of course, BFSI we just discussed. So that definitely also seems to be on a much firmer footing and well positioned to capitalize upon the growth. And then, of course, auto, I think, also ties back to the whole consumption story that India has. We've long been a consumption story, right? And
Yes, yes.
so auto
So
should
you're
tie
right.
back.
So we
Mhm.
are an aspirational economy, because, as I
Correct.
said, we are a very young economy,
Mhm.
and we are still only at under $2,000 per capita
Mhm.
income. But the aspirations are of about the $5,000. So
5,000.
obviously, consumption is we are a consumerism, right? We are in
Hmm.
that phase where So from that perspective, actually, when it comes to consumption, to my mind, there are a couple of more sectors which will actually see the disproportionate share of growth,
Sure.
because
Okay.
they are seeing disproportionate share of spending from the consumer side. So which are like healthcare, which is your one is healthcare, other is your education, and third is of course the travel and tourism, right? As we progress from $2,000 to $5,000, every incremental 500 or $1,000, we'll see much more spending going towards these three sectors, right? Because
Right.
once your roti kapda makan is taken care of at $2,000, obviously
Yeah.
your discretionary spending, which is towards your travel and tourism, better education for your
Mm-hmm.
kids, uh, and then of course better healthcare, right?
Mm-hmm.
All of this is going to see a disproportionate share. In fact, we are already seeing that,
Already seen
but
that.
I think
Yes.
it will further accelerate and accentuate over the next, at least, it will continue
Continue.
at least for next 10-15 years, is
Mm-hmm.
for sure, right?
Absolutely.
So that's another, on the consumption side, we believe that these are really a very high fast moving, or rather fast growing sectors, uh, for the next 5 to 10 years.
Absolutely, I absolutely agree. We are an aspirational economy, and definitely, and then from that perspective, bridging the financing gap, because obviously salaries are not going to increase at the rate at which our aspirations are increasing. So to
Yeah,
bridge that gap, financing की तो जरूरत पड़ेगी ही. So
right.
that's interesting. So great, Sachin. I think sectorally तो आपने बहुत अच्छी तरह हमको समझा दिया कि कैसे क्या जानकारी हमको रखनी चाहिए, क्या हमको लेना चाहिए और क्यों लेना चाहिए. Maybe quickly we can have just your overview on the equity markets from a medium to long term perspective.
Sure. So, we have to understand that probably today Indian economy is at an inflection point. Okay. So it's been like almost maybe 7 to 8 years, or maybe a little longer, almost 10 years, 8 to 10 years, where we haven't seen the capex cycle coming up. We haven't seen new capacities in most of the industries coming up over the last 7, 8, 9 years. Uh, so what has happened is that obviously by now, but the GDP has been growing at whatever pace, right? Of course, we've had couple of bad years. At least 2018 and 2019 were a little bad years because of the overall cyclical downturn in the economy, and then 2020 the COVID thing happened, right? So these 2 3 years really slowed us down. But other than that, if I see over the last 5 7 years, over the 7 8 years, GDP would have grown at least 3 4 5%. on a compounded basis, right? So in that sense, the capacities are now getting full, right? The capacity utilizations are now increasing quite significantly, right? So there is a very high probability that we are going to see the capex cycle coming back, right? That's the first point. Second, what we also seen that there is a consolidation at the top level, right? Like the top five players in most of the industries, whether it is cement, whether it is steel, whether it is sugar, they all now have 50, 60, 70% capacity, right? So obviously those players capacity utilization is significantly already higher than the industry average, so they will anyways have to actually put new capacities, right? So my sense is that we are getting into a virtuous cycle of economy actually bouncing back. Okay, because once you have the capex cycle, consumption story has always been on in India. Now we'll also have capex cycle. Third leg, which is the export side, is already picked up, right? We have seen double-digit exports growth this year, and not only that, our export number is already above the pre-COVID levels, right? Plus the push from the PLI, I mean the government manufacturing PLI schemes and all of those, plus the from the global customers perspective, they are genuinely looking at alternatives to China after the COVID that has happened, right? So there are
Right.
many factors which are really helping us to for the economy to actually pick up in a significant way, right? So
Mm-hmm.
we are already at that inflection point, and our
Mm-hmm.
sense is that plus minus 1 quarter or 2 quarters here and there because of say certain events, like a case in example is the current geopolitical tensions, which may
Correct,
have
correct.
some challenges with the oil going to this price, but suppose oil subsides back, then again I think everybody will be back on the drawing boards and start talking about their capex plans, right?
Correct,
So
right.
my point is that the capex is now going to happen. That's inevitable. It's just a
Mm-hmm.
question of whether it's happening now or it's happening after 2 quarters. That's all. It's a question of 1 or 2 quarters. But the fact is that now that we are getting into that virtuous positive cycle, uh, I think we are very clear that Indian economy is actually going to do very well over the
Mm-hmm.
next 24 to 36 months. And generally, we have
Interesting.
seen that whenever those kind of tailwinds are there,
Mm-hmm.
I think business across large, mid, small, they all tend to perform, very well. So the corporate earnings growth is going to be significantly higher over the
Mm-hmm.
next 3 to 5 years. At least next 3 years is something what we can we are very confident about,
Mm-hmm.
right?
So,
Now, whenever that happens,
mm-hmm.
typically Indian equities tend to do much better. Has been our last few years of experience, right?
So I think what you just highlighted about the capex cycle is very pertinent, and that is why I just want to reiterate it for our viewers as well. क्योंकि जैसे आपने बोला, consumption story has always been there, but yes, in the last decade, especially the 2 years prior preceding COVID, there has been lackluster growth, and companies have not been investing in new capacities. But now with consumption picking up, also a lot of lag demand, export demand, and especially that point about supply chain shift happening globally, which is why international clients are also looking towards India for resources and supply. All of these factors together, and like you shared some numbers with us in terms of already how certain companies in certain sectors are working at fairly high capacity levels, so it's inevitable that from here जो भी अभी demand growth होता है, to cater to that demand growth, capacity investments करने ही पड़ेंगे, new capacities will have to be invested, utilization levels भी बढ़ेंगे, which like you said will start the virtuous cycle of growth. Is
Sure.
that fairly summarized?
Yeah, absolutely. Perfect. Yeah.
Perfect, perfect, great. So I think that also brings us to the end of a show where I think we've discussed some very targeted and interesting points, and my takeaways from this conversation are immense because I genuinely think that for anybody who is tuned in to listen to us today or view us, there are some very precise takeaways which can help our viewers create a good investment journey and look for whether it's at a economy level, sector level, या आपने जैसे बोला even company level, how to pick up good companies within your chosen sectors. At each level, you have distilled it really well. So thank you very much, Sachin. Anything that you want to just wind up with for any message for our viewers?
So, thank you, Deepika, first of all, for having me on the show. It
Pleasure.
was really a pleasure. And just one last thing that
Mhm.
I think it's important for investors to remain focused on their long-term goals rather than getting upset with the very short-term challenges that we see. Because the inherent thing about stock markets or equity markets is that there are two certain things. One, that they will always be up and down in the short to medium term, but the second is they'll always go up in the long term. So just stay invested is because the reasons are always different. Like this time it's geopolitical, last year it was maybe COVID, before that it could be something else, after 2 years it could be something else. But the fact is that growth is life, life is growth, and will continue to grow.
Perfect. On that note, growth is life and life is growth. I will leave that, leave the viewers with that nice saying. And thank you very much for joining us today, Sachin. And thank you, viewers, for tuning in. We will see you next week. Thank you so much.
Thank you. Thanks. Bye.